Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil falls and stocks rally as Bloomberg reports the US has put forward a 15-point peace plan, but Israel and Iran continue to trade strikes. Disappointment for Denmark's Prime Minister as her party comes first in a snap election, but a long way short of a majority, setting the stage for difficult coalition talks. Plus, semiconductor design giant ARM says it will market its own chips for the first time. We'll bring you our exclusive interview with CEO Rene Haas. Piper Sandler then calling this market a one-variable market, and indeed it is. As goes oil, so goes basically everything else in this so-called war trade that we've been keeping an eye on. Brent crude creeping back above $100 a barrel, just ever so slightly. But as you can see, a lot of the air has come out of Brent crude since this idea of a peace plan being sent to Iran, potentially via an intermediary, has taken hold. New York crude, WTI, down below $90 a barrel. As you can see, the 10-year yield, while it is down barely a basis point, it's down a full 10 basis points since just a few days ago. Now, it could be a turning point for bonds. Do we continue to sell off here, or do we see some kind of a reversal? If you look at equities, you're also seeing this reflected in equities. Bear in mind, the S&P is down about 4.7% month to date, so it's on its worst month track since literally last March, a year ago. Right now, we look like we might be in for a positive day. Certainly in Europe, futures are pointed higher. And then gold is putting on a couple of percentage points again, up $76 to $45.52. Gold, a really fascinating one. Basically, it's down 20% from its peak, so it's lost a fifth of its value. That huge run-up, the air coming out of that. All right, your risk events then for today. 7 a.m. UK time, we get UK inflation data. And then at 8:45 UK time, Christine Lagarde gives an address at the ECB and its Watchers event. 9 o'clock then, we also get German IFO. Bloomberg understands the U.S. has drafted a 15-point plan to help bring the war with Iran to an end. The plan has been delivered to Iran via Pakistan, but details remain unclear. President Trump told reporters the U.S. and Iran are in active negotiations, adamant the U.S. has already won.
I don't like to say this. We've won this. This war has been won. The only one that likes to keep it going is the fake news. They have no Navy left. They have no Air Force left. They have no anti-aircraft equipment left, no radar left, no leaders left. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly. You have no idea how badly they want to make a deal.
This comes as the U.S. deploys more troops to the Middle East. Let's bring in Bloomberg's Washington Deputy Bureau Chief Laura Davison. Laura, the president literally just said there's nobody left to talk to, but we're talking to the right people. Where are we in diplomatic efforts here?
Well, Trump has said a lot of things, but it's really unclear if anyone else besides the U.S. is negotiating with Trump and other top officials here. Trump has said that Iran desperately wants to make a deal, that there are active negotiations on. Iran has denied that, and in fact, a military official just recently put out a statement saying that the U.S. is negotiating with itself. There are also reports that the U.S. put together a 15-point peace plan that they sent to Iran. It's unclear both if Iran has had weighed in on what this plan looks like, or even Israel, who continues to bombard Iran with strikes even today. The other, big question here, too, is whether there is some sort of ceasefire afoot. There have been talk of a 30-day ceasefire that could perhaps accompany this 15-point plan. But again, a lot of this is sort of on the U.S. side, putting that out there into the world, and unclear if there are active negotiations or if this is more Trump looking for an off-ramp as the economic crisis tied to this war and the political crisis at home have become more acute.
And then, of course, as we've become a little bit used to, there are two cross currents happening here. So despite these apparent efforts to de-escalate, the administration is deploying 2,000 soldiers from the 82nd Airborne Division on top of roughly 5,000 it's already sent there. What kind of a signal does that send, Laura?
Yes, we really have sort of two mixed messages, one coming from the president and the other coming from the Pentagon. There have been a rapid sort of deployment of troops, this 82nd Airborne Division. These are sort of special forces, the kind of troops that you would really have on the front lines if there were to be some sort of special ground invasion, some sort of ground operation. Those are the kinds of people you'd want to have in the region. Again, these Marines that were also that are en route right now, about 5,000 that should arrive in the coming days. But those folks aren't there yet. So there's a signal that at least the U.S. is, while talking about diplomacy, is at least preparing for the possibility of a more robust ground or military operation there. This has really caused both U.S. allies to speculate aloud, as well as some Iranian officials to say that they are concerned that this might be sort of a head fake from the president, that this talk of diplomacy is just talk and a distraction to sort of create an opening for a military mission.
Bloomberg's Washington Deputy Bureau Chief Laura Davison, thank you so much. Well, despite talks of diplomacy, Israel and Iran have shown no signs of let-up in the conflict. Israel says its military campaign will continue at full intensity, while Iran continues to maintain its grip on the Strait of Hormuz. Let's bring in Bloomberg Horizons anchor Jumana Brisecci. So, Jumana, give us the latest developments this Wednesday.
Yeah, well, I think it's important to remember that this is day 26 of the war, and the war is still going on. Even the White House Press Secretary Caroline Leavitt said yesterday, Operation Epic Fury continues with no signs of things letting up. And since the beginning of this war, joint U.S. and Israeli operations have targeted about 16,000 sites across Iran. And yes, it has managed to inflict a lot of damage on their air defense system, on their offensive capabilities, on their defensive capabilities. But from what we can see and the language that has come out of Iran, they continue to be defiant. So yes, they are battered, but still very much intact in terms of the rhetoric that's coming out. And at the same time, Israel have vowed to press on. We understand from our own reporting that the Israeli Prime Minister is looking very closely at the discussions that are set to take place, if they do take place, between Iran and the U.S. He's appointed one of his longtime allies, Ron Dermer, to examine the deal to ensure that it does lead to an outcome that is also acceptable to Israel. Because remember, they are obviously a key participant in this war as well. And at the same time, Israel are continuing with their expanded offensive in Lebanon. Yesterday, we heard from the Israeli defense minister. He also said that they will expand their operations in the southern part of the country with a potential objective of establishing a more permanent security presence in the bottom 10% of Lebanese territory. And this has led to the displacement of over 1 million people, ongoing aerial bombardment of some key infrastructure. There you're looking at images of a key bridge that was blown up that separates the northern part of the Litani River to the southern part of the Litani River. The death toll in Lebanon is 1,000. So that is a very active front in the war as well. And the final point to mention is Iran continues to maintain its effective control over the Strait of Hormuz, which is also becoming one of the key discussion points as we think about areas for diplomacy in the next coming days.
Well, on that point, Iran does appear to be allowing some foreign ships enter the Strait of Hormuz safely, but only those who pay a fee. Is that how it's working, Jumana?
Well, Vonnie, maybe we need to shift away from describing the strait as being effectively closed to being effectively controlled, because this is essentially the influence that Iran now has over the passage of vessels and tankers that want to make it through the strait. Our Bloomberg colleagues have reported that some vessels have been charged up to $2 million just to make it through. So they're actually quite physically paying off the Iranian leadership to get through unscathed. Equally, the International Maritime Organization published a letter in which Iran did say that they are comfortable to have non-hostile vessels pass through the strait. And these are vessels, tankers, ships that are not allied in any way to the U.S., to Israel, or engaged in any hostile acts against Iran. So they are making exceptions. And from what we understand, and also other outlets have reported this as well, going into this, what potentially could be series of diplomatic discussions, one of the points that Iran are insisting on is a modification about the passage of vessels through the strait. And they, of course, would like to maintain control and possibly even ask for a reworking or even a establishment of a toll facility at some point in the future. And this is a stance that would be unacceptable for Gulf countries, and not least because in their eyes, it would mean that Iran would be exercising a huge amount of influence out of the energy flows that are stemming from the region. So this is one potential sticking point to watch out for in coming days.
Jumana, thank you so much. That is Bloomberg's Jumana Bersachi in Dubai. Well, as Brent crude trades in and around $100 today on news of that possible plan to end the war in Iran, we are seeing green in Asia. So let's get an update from Winnie Su in Hong Kong. Winnie.
Yeah, morning, Bonnie. As you just pointed out, we are seeing oil retreating after these positive headlines that there can potentially be a ceasefire in about a month. And worth pointing out that traders are now still awaiting that confirmation from Iran. So that's why you are seeing that Brent crude here down about 4% or so. But it really is off the earlier low that we saw, about $97 per barrel, and now just trading slightly above $100 level. So that's telling you how investors still await for more signal and more confirmation. Now you flip the board and see how overall that slight weakness in oil prices is translating to a bit of a strength in the Asia stocks market. You can see MXAP here up slightly less than 2%, but effectively we have erased all losses that we saw on Monday when Trump announced that 48-hour deadline. However, similar to oil, we are seeing that during the trading session, things have been quite volatile and momentum losing throughout the session. And that is showing you how traders are still trading from headlines to headlines instead of a firm confirmation. Worth pointing out that Hang Seng Index here underperforming. We are actually in the busiest week when it comes to earnings in Asia for this quarter, and some disappointment when it comes to earnings from Xiaomi and PopMart weighing on the gauge. Another sector that's really underperforming today is the software sector, as you flip a board and see how these Japanese software stocks under pressure. Now, that is coming as some fears rekindling around the AI disruption. We have a report earlier on saying that Amazon, specifically AWS, considering a new AI agent to automate some of its functions as part of that restructuring plan. So still some of these movements when it comes to the AI space as well. Back to you, Bonnie.
All right, Winnie, we'll keep an eye on those markets. Thank you. That's Winnie Su there in Hong Kong. Stock futures on both sides of the Atlantic seem to be welcoming the Mideast diplomatic push. We're joined now by Mark Cudmore, Bloomberg's executive editor for Markets Live. Well, as Piper Sandler says today, Mark, it's a one variable market. So goes oil, so goes all of these other trades that we've been watching. What would you look to for some kind of a breakout? Should it be treasuries? Should it be gold?
I think that's right, that it is a one variable market. Probably the levels I'm looking at in Brent crude is that if, we're back above $100.50, which was kind of a various kind of binary breakout level back and forth over the last week or so, that kind of implies that we've already kind of exhausted the relief rally from the 15-point plan, given that there are ongoing missiles being thrown and the effective control of the Strait by Iran. The situation hasn't changed positively. I think above $105 a barrel for Brent crude would imply we're trading a much more negative scenario again. I think below $95 a barrel would kind of imply that we're expecting the war to be over soon, and we really believe in the police stocks. They're the kind of levels I'm looking at. Ultimately, I don't think much has changed. That the situation is much worse than it was a week ago. I think a bad environment for global markets is only going to get worse. I think that not only do we have an ongoing conflict and still no coherent off-ramp for Iran, but they are in control of the Strait, and oil prices remain extremely elevated. We are going to see some sort of energy shock, some sort of supply chain shock, an inflationary shock. We don't know how bad it will be, but we know we're going to get one. We're going to see much higher yields globally than we were expecting only a month ago. So the outlook continues to be quite bleak, and I still expect much further losses in global stocks over the next coming weeks.
All right, Mark, thank you so much. Mark Cudmore, Bloomberg's executive editor for Markets Live. Still ahead, ARM announces plans to sell its own chips for the first time. More from our exclusive interview with the CEO coming up. But first, disappointment for Denmark's Prime Minister as her snap election gamble fails to pay off completely. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Tough negotiations lie ahead in Denmark. That's after the country's election ended in an inconclusive result, leaving the Prime Minister's future a little uncertain. Mette Frederiksen's party won the most votes, but failed to secure a majority, marking its weakest performance in more than a century. Frederiksen expressed her disappointment following the result.
Of course I'm disappointed. I'm disappointed that we didn't come first. I had also hoped for a better result, but there is nothing today that can make me unhappy that the Social Democrats have once again become the Danes' clearly preferred political party.
Let's bring in Bloomberg's Copenhagen bureau chief, Sarah Skjolen. So, Sarah, what happens next after this little bit of a disappointment, but maybe also a little bit of relief for the current Prime Minister?
Well, as you rightly said, Vonnie, we're looking at her trying to hash out a government now. She's looking at some very difficult negotiations with some of her left-wing allies. She probably has to bring in some right-wing parties as well. And it's a very fragmented Danish political landscape at the moment. So they're all drawn up these red lines that they won't cross for them to enter a coalition. So she really has to bring out her best negotiation skills to try and get everyone to meet. There is a risk or chance, depending on how you look at it, that she actually will not succeed, and she has to pass on the baton to another party, then get a stab at trying to form a government. This will play out today. There'll be a lot of chat about it the next few days, but this could also take weeks.
And she has already toughened her stance and her party stance on immigration. So, what parties can she work best with?
Well, she comes from a traditional left-leaning background, so there's no doubt she'll probably try and see if she can form a coalition with some of the parties that support a more socialist agenda. At the same time, she is trying to be really, really tough on immigration, and the election result did show that the Danes are also in favor of tough immigration politics in Denmark. Climate was also a big issue. Maybe it's strange for viewers outside Denmark, but clean drinking water and welfare and the pig farms turned out to be a huge issue for the campaign and something that really rallied the Danish voters. So she has to balance climate, animal welfare with top immigration, and also in a time that's really impacted by everything that's going on in the world. Danes also signaled they want a strong leader to stand up against everything that's happening right now.
Yeah, and I mean, we're likely going to see a series of ballots in various European countries that will be basically, a vote on how countries turn up with President Trump, right? So to an extent, that was this vote as well. What's the procedure now? There's going to be negotiations. Is there a deadline for coming up with a governing bloc?
There's no deadline per se. Mette Frederiksen will get first stab at trying to form a government, but she might also have to bring in some other of the more right-leaning parties. They might get the next stab at this. What has really emerged is that the foreign minister, Lars Løkke Rasmussen, has been quite famous in Denmark from standing up against Trump. He's been quite confrontational against Trump in the whole Greenland issue. He went to Washington, he talked to Marco Rubio, he talked to Vance. He's really going to be the kingmaker now. So even with all the domestic issues, anti-immigration, clean drinking water, Trump has been lying as like this underlying current under the whole election. So we're seeing now that, this guy now on TV, the centrist party, he's branded himself as this guy that can stand up against Trump. And now it's really up to him to try and get both sides to meet and form another centrist government. But it's not going to be easy because all the parties are so fractured at the moment.
Yeah, absolutely. And no matter what happens, as you say, it's going to be a fractured government, and you're going to have parties coming together that have never really worked together in government before. Is her job as Prime Minister safe?
Absolutely not. I had given maybe like a 70-75% chance she'll secure a third term. But because she really has to negotiate with so many different parties that don't necessarily align with her, she might have to hand over to one of the more right-leaning parties to try and negotiate a government. Or Lars Løkke Rasmussen, the foreign minister, could also come in, do a big surprise, put herself in the center of all this, and maybe he could emerge as prime minister. This is not the base case at the moment. It's just that we're not used to these very uncertain election results in Denmark. Traditionally, it's been the right wing or the left wing. We all gone to bed before midnight, and we'd wake up the next morning knowing exactly what the government would look like or the prime minister. But now it's all up in the air, primarily because of the foreign minister who wants to form like this new centrist government to stand up against everything that's going on in the world. So it's very unlikely at the moment. We're all expecting Mette Frederiksen to become prime minister, but she will also have to give up on a lot of her red lines in order for that to happen.
Such a fascinating time in Denmark. Sarah, thank you so much. Bloomberg's Copenhagen Bureau Chief, Sarah Sjolen. Coming up, the safety system failure that contributed to that fatal crash at Laguardia Airport. More next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other top stories we're following this morning. Investigators looking into the fatal crash at New York's LaGuardia Airport on Sunday say there was a failure in a safety system that's supposed to help air traffic controllers monitor vehicles and planes on the ground. The two pilots of an Air Canada Express plane were killed when the plane crashed with a fire truck on the ground as it landed. The head of the National Transportation Safety Board says the fire truck did not have a transponder that would have helped pinpoint its location. A Democrat is poised to represent President Trump and his Mar-a-Lago residents in the Florida State House of Representatives. That's after Republicans lost a special election in a surprise upset. According to Decision Desk HQ, Democratic candidate Emily Gregory is projected to beat her Republican opponent. Republicans hold a wide majority in the Florida State House, so the result will have little effect on state politics. Italian Premier Giorgia Meloni has called on Tourism Minister Daniele Santanchè to resign after a defeat in a key referendum. The demand follows the exit of two Justice Ministry officials. It all comes as Meloni attempts to clean house and stem the damage from the referendum loss to reform the governance of Italian counts. So let's take a look at these markets as we prepare for a Wednesday hump day, and it looks like we've reversed that war off again, you'd like to say. Brent crude trading under $100 a barrel earlier this morning. It's back above that level now, but still off by 4%, and that's affecting everything else across markets, including treasuries. So you see the 10-year yield at 435.20. We're a good 10 basis points off our high. Mind you, it could go in either direction, as could anything else, right? Euro Stoxx futures pointing to a gain, although they're off their highs of the session. And if we take a look at some other assets, if you look at gold, we're down 20% from our peak in January. So that's a huge fire sale of gold, if you like. We're up 1.7%, albeit today, but nevertheless still at that 45 plus mark. The US dollar index very fractionally lower. And then Bitcoin, as you might expect with this war off trade, seems to be trading higher again. It's above $71,000 a coin, and that should no doubt help all those Bitcoin-related stocks today. Well, coming up, oil and equities react over a diplomatic push to resolve the war in Iran. We'll discuss the impact on markets with Emma Wall from Hargreaves, Lansdown. That's next. Do stay with us. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil falls, stocks rally. As Bloomberg reports, the US has put forward a 15-point peace plan, but Israel and Iran do continue to trade strikes. Disappointment for Denmark's Prime Minister as her party comes first in a snap election, but a long way short of a majority. That sets the stage now for difficult coalition talks. Plus, semiconductor design giant ARM says it will market its own chips for the first time. We'll bring you our exclusive interview with CEO Rene Haas. So let's look at these markets as they've decided it is war off today, right? So we have Brent crude trading around $100 a barrel. That's the lowest we've seen in some time. Mind you, if you had said a couple of weeks ago that we'd be trading at $100 a barrel, the markets may have freaked out, as they did, I'm sure, at the time. New York crude is actually below $90 a barrel. If this continues, then Ed Yardeni says he's lowering recession odds to about 20%. Currently, if this continues to go higher, he has recession odds in the United States at 35%. So there's quite a difference there. If you look at the 10-year yield, we're at 435.40, a long way off our highs, but also a far cry from where we were at before all of this started. And it really is an inflection point now. Does oil continue to drop and other assets continue to reflect that drop? Or do we move in another direction? Or does something else come along and really upend this market? Let's take a look at futures, because for right now, at least, they are pointed higher in the US, but particularly in Europe, where we're seeing a nice gain at the open if this holds, although we're off our highs. Gold also has reversed course. It's down 20%. It's lost a fifth of its value since just its peak in January, but we're higher today at 4,554. So obviously inflation has been having a real impact on the gold trade, and maybe now inflation isn't such a concern if oil continues to stay lower. Goldman Sachs, mind you, today saying that it's still looking for 2 cuts this year and that the likelihood of a hike is way too priced in. All right, time now for your front page news. The Financial Times leading on oil back near $100 as President Trump sends mixed signals on the war. The U.S. president continues to play up the prospect of a deal, but the Pentagon also is sending more troops to the Middle East. Meanwhile, the headline on the Wall Street Journal reads, the oil supply crunch is spreading from the Gulf to the rest of the world. The newspaper says that unless peace talks pan out fast, traders say high prices for specific Mideast crude cargoes will soon cascade to the U.S. and elsewhere. And finally, the Times leading on Iran saying that non-hostile vessels can enter the Strait of Hormuz. Tehran says vessels which cooperate with Iran authorities may re-enter the vital waterway through which a fifth of the world's oil passes. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. Bloomberg has learned that the U.S. has drafted a 15-point plan to help bring the war with Iran to a close. The proposal has been delivered to Iran via Pakistan, but details remain unclear. President Trump is demanding that Iran dismantle its nuclear program, but there's uncertainty over Tehran's participation. This as Israel and Iran continue to trade strikes. Oil prices, though, falling on the back of the Mideast diplomatic push. Joining me now is Hargreaves Lansdown Chief Investment Strategist Emma Wall. I saw a great comment yesterday, in fact, it was from our own John Authors of Bloomberg Opinion, Emma, that the markets will decide when this is over, right? I mean, the president already saying it's a win. At some point, will markets just move on?
Yeah, I think so. I mean, the last month has been extremely volatile, and we've been sort of looking almost, I write a market report for our clients on a daily basis, and, normally it's enough to get the bulk of it done the night before and finished off in the morning, and that hasn't been a strategy that's been working at the moment. I think markets like to trade on optimism. They like to trade on hope. They don't like uncertainty, so it's hardly surprising that we've seen a really positive response today and indeed yesterday to the prospect of talks. But ultimately, it's only going to stick if that rhetoric becomes action. And, we've seen that a little bit in terms of the intraday volatility. It wasn't enough that Trump said talks had begun. There is then this sort of this counter narrative in terms of potentially the UAE and Saudi coming into the war, potentially the Pentagon sending more troops to the region. So unless we see a sustained, movement in that direction, foreign policy that sticks, it won't be enough to kind of quell these markets. I think one of the things, that we're really looking at is, is a ceasefire possible? And that will be a really big step forward in terms of both for sort of from a humanitarian point of view, geopolitical point of view, but from a market point of view, to really put the past month behind us. And then from there, it's the Strait of Hormuz. But it's those two major things.
If if the US sort of declares victory and pulls out, or at least doesn't get further involved in this war, but it does continue regionally, does that make an impact on these markets?
Yeah, I think for two reasons. Number one, it does take some of the acute nature out of what's happening, and it provides, although not necessarily stability, some more certainty, which again markets will welcome. The challenge is, the Middle East will not overnight become a region which is therefore just peaceful and harmonious. And we do depend on the Middle East so much for oil, for gas, and we've seen the impact on that. So I do think, although that might be enough to sort of push equity markets, actually what it means for oil prices going forward may not be enough to bring it down to sort of the levels that we saw pre-war, the 60s and the 70s dollar per barrel.
So, Emma, what have clients been doing? You say cash levels have risen. What have they been selling, and are they waiting to put any money to work?
Yeah, what's really interesting is, we don't have the whole of the retail market, obviously, in the UK, but we have 2 million clients. So it's a pretty good proxy for how retail investors, rather than institutional professional investors, are reacting to this. And ultimately, unsurprisingly, investor confidence has fallen. We have seen a real risk-off approach. So we've seen cash levels on the platform rise. We've also seen some profit-taking, which is not necessarily a bad thing. So although, the stocks that they've been selling are down a bit since the beginning of the month, they're selling down sectors actually that have had multi-year, good returns. So we're looking at kind of the defence sector, the banking sector, tech stocks, where actually, even if you're selling on slightly depressed levels through March, you're still sitting on quite a good gain. They're also taking some money off the table from gold and silver. And where they're putting that money to work is actually a lot more in sort of money market funds. Gold gilts have been very popular. Obviously, yields are looking pretty compelling. And the retail investor likes to buy gilt for the yield, for that income. And at 5%, earlier in the week, a 10-year yield, that's quite nice.
Sure, but is the retail investor concerned about inflation as well, or concerned about growth?
I think this is a good opportunity, and we've been saying this actually. If you have a well-diversified portfolio, the best thing to do when at times like this is actually nothing. It's a very boring response, but for retail investors, our clients are investing for multi-decade horizons. So yes, there may be a short-term influence on inflation, but actually if you're building a pension portfolio, if you're investing, for 10, 20, 30 years in the future, diversification here is your friend. Shorter term, we're obviously coming up to the end of the tax year, and so people are thinking about, where do I put new money now? Inflation is a worry, but I think you're being rewarded for that in the gilt market. And actually, therefore, gilts are popular. We're also been looking at kind of fixed income actively managed funds, where you can have someone who's very good at being nimble and take advantage of kind of the volatility in that market. And so as the inflation story changes day to day, which it is, because inflation expectations are changing, and at 7 o'clock we'll find out what's happened in February. Actually, if you have an actively managed fund with a real nimble mandate, they can take advantage of some of those fluctuations.
What's happening to the AI trade as all this is going on? Because obviously we're seeing, a little bit of air come out of it, but also I'm sure there are dip buyers that are just desperate to get back into this market. Should they not? Should they stay away?
In terms of retail activity, we've seen actually that's been one of the trades that we've seen on both sides. So both net buys and net sells. Tech has been one of those ones that sort of, depending on the day, depending on the week, people are potentially looking in to go in and buy the dip. What we would say is we came into this year saying that actually this is an area that we think was overvalued. So even if you're coming off sort of 5-10% from those valuations, be careful about what you already have in your portfolios. Because of the run we've seen in the last few years, a lot of our clients were already overweight that sector. So buying that dip, before you go in and buy that dip, have a look at kind of your asset allocation in your sector and geography.
What do you do, though? You have to take a view on inflation, right? And that's going to really impact everything you do, because if inflation is more than anticipated, you want to be in different sectors than if it's still on the Fed's glide path or the BOE's glide path or the ECB's glide path.
Yeah, so I think there's two sides to this. There's, the sectors that are particularly sensitive to rising prices, those that are energy intensive, and so therefore it's a kind of stock by stock basis. Then there's the what does it mean for central bank policy? We actually think that although inflation will temporarily rise, it doesn't necessarily mean that you are going to get rate hikes, certainly from the BOE. If you take comparison to where we were, say, the Russia-Ukraine war, interest rates are at a very different level. And actually, I think interest rates at this level can absorb more inflation just by holding rates. They don't necessarily have to raise rates. Back when Russia invaded Ukraine, rates were at near zero. And so therefore, as a countermeasure take control of inflation, rates had to come up quite a lot. So we actually think that while the war is this acute and inflation is this uncertainty, actually it's more of a hold mechanism, which indeed we did see last week.
Yeah, absolutely. Thank you so much for joining us in studio today. This is Hargreaves Lansdown Chief Investment Strategist, Emma Wall. The President of the European Central Bank will address the ECB and its Watchers conference in Frankfurt later this morning. Christine Lagarde's speech will be closely watched for comments on the impact of the war in Iran. Let's bring in Bloomberg's ECB reporter, Jana Randau. Jana, what do you expect we'll hear today? It's not long since we already heard from Christine Lagarde, but she'll want to keep the market on track, right?
Yeah, I mean, this speech this morning is one of the more important speeches the president delivers, in a year. So people will be glued very much to her lips. What they probably won't hear is a policy signal. Those speeches have contained them in the past, but of course the situation is very volatile. And last week after the press conference, she was very clear at saying there won't be any guidance. The ECB will decide meeting by meeting based on data, and she will probably stick with that message. So no policy signal as such, but those speeches are highly interesting. They usually deal with problems very close to the ECB's heart. At the top of the agenda, if you want, and they often look into, give you a perspective on how the ECB looks at a specific problem, how the ECB intends to solve that problem. So on that front, we might just learn a little bit more about the ECB's reaction function, as economists say. So what will trigger which reaction? How are problems weighed? In terms of importance. So more insight into how the ECB will decide, not so much insight into what the ECB will decide.
Yeah, absolutely. Well, traders have already decided they're pricing in more ECB hikes for this year, though obviously that could change in a dime. What are economists saying?
Yeah, economists are coming around. I mean, traders have a big advantage here. They can change their mind anytime they want. And we've seen that over the past week. We've seen priced, or 2 hikes, 4 hikes, priced changes very quickly within hours, sometimes even reacting to the news. Now, economists don't have that luxury, but they do come around. We've seen rate call changes from Goldman, from JP Morgan, from Morgan Stanley, Deutsche Bank, you name it. And mostly, they are converging to 2 interest rate increases this year. A big part of that, of course, is that the ECB's projections are built on expectations for 2 hikes. That was what was priced in the market when the ECB cut off data that are feeding into those forecasts. And it's just natural with those forecasts also showing inflation just on the core measure, just overshooting 2% a little bit over the forecast horizon, that if you don't deliver those 2 hikes, inflation will be higher. So that's what economists are coming around to, with very big footnotes, very big caveats saying it'll depend on oil prices, it'll depend on how the war in Iran and the broader Middle East region develops. So a lot of uncertainty still, but yeah, 2 hikes is what economists seem to be converging to right now.
All right, Jana, thank you so much. We'll hear from you and read your stories after. Jana Randau, Bloomberg's ECB reporter. Coming up, ARM sets its eyes on a $15 billion chip business with plans to sell its own semiconductors for the first time. More from our exclusive interview with the CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. OpenAI is to discontinue its Sora AI video generator 6 months after the high-profile launch of a standalone app for the service. This as the ChatGPT maker works to simplify its portfolio of artificial intelligence products. Now, OpenAI says it's also winding down its partnership with Walt Disney, which had centered on Sora. Disney had previously agreed to license iconic characters, including Mickey Mouse, for use on Sora and to take a $1 billion stake in the startup. Apple is testing a standalone app for its Siri voice assistant and a new Ask Siri feature as part of a broader AI overhaul. Sources say the new Siri is designed to tap into personal data and interact with users in a conversational way through text and voice. We're told the upgrade should be unveiled at Apple's developer conference in June. ARM Holdings will begin selling its own chips for the first time, adding a business that it expects to generate about $15 billion annually within 5 years. CEO Rene Haas spoke to us exclusively about the new product and its aggressive sales goals.
It is a very big day for ARM. There's no doubt about that. We've been an IP provider since we started. We started selling compute subsystems a few years ago, which was sort of the next step, but it's not a physical thing. But as we grew into the CSS business, we had customers that kept asking for more and more and more. And here we are today with ARM's first chip product, the ARM AGI CPU, which Meta is our lead partner for, and Meta asked us to do it with them. So we did.
Talk to me about Meta and the partnership then. One of your customers, OpenAI, also a customer. What are the commitments from Meta, from OpenAI to take this chip on board? When do you start shipping?
So as Mohammed said, it's available now, and we'll start shipping at the end of this year. We're not saying anything publicly about the volumes associated with it, but they are material enough that we have to start talking about the product because it's going to start showing up on our revenue this year.
The revenue starts showing up this year, and in your presentation earlier here in San Francisco, you talked about potentially just this one revenue stream, just this one part of the business, potentially $100 billion by 2030. Talk us through how you get to that $100 billion.
So we're looking here then, Tom, at the general purpose CPU TAM, which today in 2026 is about $60 billion, $70 billion, depending on your maths. I talked about agentic AI driving a 4x CPU workload even today. So $60 billion going to $100 billion by the end of the decade in terms of market opportunity is not really that much of a stretch.
How much of this is about that huge demand we're seeing, particularly here in Silicon Valley, for agentic AI? How much of this is aligned to that shift?
I think you have something key that's underpinning everything, and that's the demand for compute, period. And compute has been perceived in AI about just generating tokens. But those tokens need to be distributed, managed, orchestrated, scheduled. That's all work that only CPUs can do. So the more and more compute that drives agentic AI drives huge CPU demand, which is great for the product we just announced today.
The other number that you announced was $1 trillion, and that's the entire business by 2030. You were a $4 billion revenue company in 2025, and you're looking at $1 trillion potentially by 2030. Just unpack that for us. How do you get to $1 trillion potentially by 2030?
Yeah, so what I showed there was a TAM, total available market, of $1 trillion by the end of the decade. And I showed a picture that had some other die photographs of things that we could do with the tagline, we're not stopping here. So more to come, but today is all about the ARM AGI CPU.
More to come. So you have the pipeline of CPUs. Do you move into GPUs? What else is involved in more to come?
The compute demand for AI is off the charts. And ARM is at the heart of literally every AI compute workload. So we have a lot of different ways to go address that.
ARM CEO Rene Haas speaking exclusively to Bloomberg's Tom McKenzie in San Francisco. Bloomberg has learned that Citadel Securities posted a record $12.2 billion in trading revenue last year as the market-making arm of billionaire Ken Griffin's empire continues in its bid to compete with the world's largest trading desks. The result marks a 25% increase from the previous full-year record. Citadel capitalizes on market turbulence, stepping in as a liquidity provider during dislocations like those triggered by tariff policies and geopolitical conflicts. Ares has joined Apollo Global in limiting withdrawals from their private credit funds. This after clients sought to redeem more. The combined caps mean that roughly $1.5 billion worth of redemptions will be blocked. This tracks a broader move as investors grow increasingly anxious about a liquidity squeeze in private credit markets. Plenty more coming up. This is Bloomberg.
it's a ripple effect. South Asia first to get that brunt. That's moved to Southeast Asia, Northeast Asia, and then more so into Europe as we get into April. And so we are trying to work with governments to just alert them to the various levers they will need to pull, including on the demand side.
There will be less demand. There'll be fewer people traveling as prices go up. That's part of our cut capacity 5%. Like, you know, when airfares have to go up because of oil prices, there are going to be some people that choose not to fly, and it'd be naive not to realize that.
We have fuel security, but we have stepped up a government response to anticipate that in the future there could be disruptions to supply, as we source a lot of our refined fuel out of South Korea and Singapore, and it's obviously that region of the world that has been impacted by disrupted access to crude oil out of the Middle East.
Recent TV guests weighing in on the disruptions being caused amid the war in Iran. And to that effect, let's take a look at oil volatility, right? So it's elevated and it is not coming down right now. If you look at that blue line, that's the front month volatility, 20-day volatility, it's the highest it's ever been. It is instructive, though, that perhaps if you look out further, so 6 months, that's the white line, that's, you know, not as elevated. And there's a massive difference. But I'm not sure anybody is expecting this war to last 6 months, and you can obviously see that in oil. But traders are pricing in very small chance that that will happen. Let's take a look at software, because, of course, Amazon's headlines yesterday threw that sector into confusion once again. And if you were a dip buyer that thought it might have been a good idea to start buying software companies over this last period, well, you're out of luck, because it does appear that the Amazon headlines didn't help in that regard. And if you look at the iShares Expanded Software ETF, we're right back at around $80. Those are levels we last saw back in 2024. And then I do want to look at private credit, because the banks, it seems, have found their footing. But with these latest Ares and Apollo headlines, and bear in mind those stocks are down 34% and 23% apiece, you can see that private credit has definitely not found its footing, right? So the Bank of America Credit Proxy Index is at -18, while the KBW Banks Index is still well above that. So we're going to keep those private credit headlines just at the side of our eye for the moment. Of course, it is a self-fulfilling prophecy, a vicious circle, if you will. So we'll see if these credit managers can stem any tides that are on the way. All right, to access, search and save all of the Bloomberg Terminal charts used on this show and across Bloomberg TV, Terminal subscribers can now use the brand new function CHRT TV Go. Your risk events for the day at 7 a.m. UK time. You get inflation data out of the UK. 8:45, Christine Lagarde addresses ECB and its Watchers Conference. And we get the EFO data at 9 a.m. UK time. Coming up, the Vice President of the French Senate Foreign Affairs Committee joins Francine Lacroix on the Pulse at 9:45.